So they used a program called FHA financing, Federal Housing Administration. And on that transaction, you can also, sometimes you can get a seller credit to help offset some of the closing costs. So myth number one, you don't need a whole large down payment in order to buy a home. So you can do little as down as 3.5%, 3%. We also do a DPA, which is a down payment assistance, which the lender will come in to help you with the 3.5% down payment also. All right, myth number two, you gotta have good to decent credit to buy a house. This is why I brought this up, because we technically can go down to a 580. So in general world, that's actually considered very bad credit score. But you got to keep in mind, FHA was chartered. Okay, those loans are backed, secured by the government, and their charter is to help home ownership. So they're okay with lower credit scores, higher debt ratios, what else? Low debts. So they're chartered to do that, to back and promote home ownership. So we were able to help a client with a 584. This is late last year. I had to remember this file, out in Sacramento, and they had to actually pay down debt to qualify. The kicker on that specific file for number two, we couldn't use, the family actually has a second source of income. It's the wife's income, but the wife had less than 2-year work history, so we couldn't use her income. So technically, it looked on paper like they had a very high ratio, but if you include both spouses' income, they were much more manageable. But the challenge on that file was a 584. It's not easy to get a 584 through underwriting. It's not, they're gonna ask for a lot of conditions. But we were able to help that family. So myth number three, you have to be working at the same place, for at least a while. And that's not necessarily true. Ideally, underwriter wants you to be at the same job for at least the last 6 months. They don't want to see large job gaps. So you worked at company A, took a year off, now you're working at company B. That's not good. But if you had that situation and you started at company B and you're at least at company B for at least 6 months, that's what they're looking for. So again, they're looking for stability. Are you gonna be able to pay my loan back? Right? It's fair. So one of the gems for new college graduates is every bank pretty much will use the history of being in college or at university as your working history. So if somebody went to Sac State, this client on number 3, they went to Sac State, they majored in engineering. It took actually a long time, right? But they understand people can take breaks, they were tired of college, they wanted to travel a little bit. Then he got his first job as an engineer for the state of California. So they'll use the history as part of that working history. It's a full-time job, so that's what the underwriters look for. Hey, it's a full-time job. I know you're new in this job, but you're guaranteed this certain amount of income each month. So again, you don't have to work at a single job for a very long distance of history, as long as you have some college degree, or you can even have different types of jobs. Job A, job B, switching jobs. That's okay. So as long as you have a 2-year working history, they'll take you. We'll take you. I'll open it up to questions on those 3 misconceptions first. Okay.
What happens when you have you are a trade technician or you are a self-employed guy? Do you have opportunities?
Yes. So a lot of you guys heard me say stated income, right? That's a deal for self-employed people. That's what what that program is designed for. Because self-employed people, they gross a certain amount and they'll write off everything and the net is very low. So for self-employed people, they can use different programs like a P&L, profit loss program, a bank statement program. So there are alternative ways to get a loan.
Is there some myths or misconceptions regarding using the VA loan?
Not really. To me, the VA loan is I've always said the best of the best. 0 down, no mortgage insurance, the greatest interest rate. It's the best of the best, but you got to be a veteran to obtain it.
That's what
Just want to self-employed.
Okay.
So I heard a myth, regarding to the first one, it's minimum down payment you need to have is 5%. And now you're telling us 3.5% is okay? What's the difference there?
So you could do a 3%, actually with conventional. FHA, we do all day, every month, 3.5%. So you can technically do 3.5%.
So like 5% is just conventional and this one is just,
You can technically do a 3% conventional.
wow.
Yeah, it's
You
there.
gotta talk to Hugh.
Yeah. And just like I was adding on top of that. All right, my time's up. Thanks, guys.